the hum of the Australian economy has a different rhythm these days. For many, it's a relentless, high-pitched frequency of escalating costs, a tune played on the instruments of inflation and uncertainty. We're witnessing a critical juncture where the resilience of our small business owners and freelancers, the very backbone of our communities, is being tested like never before. This evening, we delve into the unseen forces at play, the numbers dictating destinies, and the human stories behind the headlines. From the bustling urban centers to the quiet coastal towns, a profound shift is underway. The daily grind of managing a business, once challenging, has now become a complex equation of survival agonist rising overheads.
Our latest Australian Bureau of Statistics data PNTs a clear picture. Consumer Price Index figures show a sustained upward trajectory, with household expenditure for essential goods and services escalating. We're seeing energy prices, transportation costs, and even basic raw materials for local manufacturers experiencing significant upward adjustments. Fuel, for example, has seen average price per liter increase by over 20% in the last year in some capital cities, a direct and measurable impact on operational logistics. The broader macroeconomic environment indicates that these cost pressures are not transient.
It's not just a statistic for people like me. It's a DLI calculation. Take Sarah, a freelance graphic designer in Melbourne. Her electricity bill for her home office, which runs her high-powered workstation and air conditioning during long summer days, has jumped from an average of $350 a quarter to nearly $500. That's a 42% increase, an extra $600 annually, which for her means foregoing a new software subscription that could boost her efficiency or delaying critical hardware upgrades. Then there's the cost of her monthly high-speed internet, essential for large file transfers, which increased by $10. That might sound small, but when every dollar is accounted for, that's another $120 a year. Her professional indemnity insurance, an absolute non-negotiable, also saw a 15% increase at renewal this year, adding another $90 to her annual outgoings. Suddenly, that essential business coffee meeting costs $6, up from $4.50 just 2 years ago, a 33% hike. For a freelancer, these micro increases collectively chip away at net income, forcing a reevaluation of pricing strategies or a reduction in personal discretionary spending. It's a relentless game of financial whack-a-mole.
The Reserve Bank of Australia has been clear that Australia is not immune to global forces. While domestic factors certainly play a role, international supply chain disruptions, shifts in commodity prices, and the monetary policy decisions of major global economies invariably filter into our local market. This creates an environment where even seemingly isolated events can contribute to a pervasive sense of unease, impacting investor and consumer confidence. When we see unsettling societal signals, such as the recent disgusting anti-Semitic graffiti sprayed on the historic Plantagenet Battery along Western Australia's south coast, it underscores a broader downturn in societal harmony. While not directly economic, such events can subtly erode the intangible trust and stability that underpin business confidence and long-term planning, fostering an environment of broader uncertainty. This general sentiment can make businesses and consumers more cautious, which itself has economic implications, affecting spending and investment decisions.
Beneath the surface of rising prices lies a complex web of structural factors. These aren't just transient fluctuations, but deep-seated issues reshaping the economic landscape for Australian enterprises.
Australia, like many developed nations, has grappled with persistent supply chain challenges since the global health events of recent years. Shipping costs have seen periods of rapid expansion, and lead times for critical components have extended dramatically. For instance, a small furniture maker in regional Victoria might now wait 3 times longer for specialized timber from overseas suppliers, impacting production schedules and cash flow. Concurrently, the domestic labor market remains remarkably tight. The unemployment rate has hovered at historically low levels, leading to upward pressure on wages. While beneficial for workers, For small businesses, especially in sectors like hospitality and skilled trades, this translates directly into higher operational costs that must either be absorbed or passed on. We also observe elevated energy prices driven by global events and domestic infrastructure considerations, directly impacting everything from manufacturing plants to the corner bakery's oven.
Let's consider Alex, who runs a small artisanal bakery in inner-city Sydney. His flour costs, a primary ingredient, have increased by 25% over the last 18 months. If a 25-kilo bag of premium baker's flour cost him $30 previously, it's now $37.50. For a baker using 20 bags a week, that's an extra $150 a week, or $7,800 annually, just on flour. Then there's the butter, up 30%, and eggs, up 20%. His energy bill for his commercial ovens has spiked by 35% in the last year. Previously, he might have spent $800 a month on electricity. Now it's $1,080, an extra $280 monthly. Faced with these input cost escalations, Alex has two choices: absorb the costs, which eats into his already slim profit margins, or raise his prices. Raising the price of his signature sourdough loaf from $8 to $9, a 12.5% increase, might deter some customers who are themselves tightening their belts. It's a delicate balance, and often, small businesses find themselves caught in the middle, facing potential systemic imbalance in their own P&L statements.
The RBA closely monitors these structural shifts. From a global perspective, we've seen nations grapple with the aftermath of geopolitical tensions, resource scarcity, and climate-related disruptions, all of which contribute to an environment of persistent global inflationary pressure. Australia, as a trading nation, cannot fully insulate itself from these international dynamics. These factors aren't just academic, they influence government policy and public sentiment, sometimes leading to friction. The recent incident at the Labour conference in Sydney Town Hall, where two men unfurled a Palestinian flag and demanded answers before being removed, highlights the intensity of public discourse and the divergence of opinions on complex issues, even amidst a conference focused on economic policy. Such moments, while political in nature, underscore a broader societal energy that can permeate economic confidence, reflecting a downturn in consensus on various fronts. They remind us that the economic narrative is never simply about numbers. It's intricately woven into the fabric of social and political stability.
There's often a disconnect between the broad strokes of institutional policy and the granular reality faced by consumers and small businesses. While central banks pull levers designed to stabilize the economy, the impact on individual livelihoods can be profoundly varied.
The Reserve Bank of Australia's primary tool to combat inflation has been interest rate adjustments. We've seen a series of rate increases designed to temper demand and bring price growth back within target ranges. These increases flow directly through to variable home loans and business lending, increasing the cost of capital. On the fiscal side, government initiatives, such as targeted grants or infrastructure projects, aim to stimulate specific sectors or regions, but their broad impact can take time to materialize. Asset classes, such as residential property and the Australian share market, have shown varying responses to these policy shifts, creating a complex picture for investors and property owners.
Let's look at Maria, a sole trader running a mobile massage therapy service in Perth. When interest rates were low, she secured a $50,000 business loan for a new therapy van and equipment at a 4.5% interest rate. Her monthly repayment was roughly $930. With successive RBA rate hikes, her interest rate has climbed to 7.5%. Her monthly repayment has now increased to approximately $1,050. That's an extra $120 a month, or $1,240 annually, directly out of her cash flow. This isn't theoretical. It's money that can no longer go towards marketing, professional development, or even her family's grocery bill, which itself has ballooned. Her weekly supermarket shop for her family of 4, which used to be $200, is now consistently $240, an increase of 20%. That's another $2,080 a year gone. So, Between her business loan and groceries, Maria is effectively $3,520 poorer each year, just to MNTN the same standard of living and business operations. To compensate, she either has to take on more clients, working longer hours, or consider a slight increase in her service prices, risking client retention in a competitive market.
The RBA operates with a dual mandate: price stability and full employment. Achieving this balance is a complex act, particularly when facing both domestic and international headwinds. The impact of monetary policy often has a time lag, meaning the full effects of rate adjustments might not be felt for several quarters. This creates a challenge for institutions, as they must act based on forecasts and projections, while the public experiences the immediate effects. However, we also see examples of targeted intervention. The recent announcement of funding for Alice Springs tourism operators, including free flights for visitors and a new grant fund, is a clear instance of a strategic institutional response designed to prevent a sharp decline in a specific regional sector that has experienced significant challenges. This type of nuanced policy application acknowledges that a one-size-fits-all approach is often insufficient, and specific sectors require tailored support to overcome particular downturns.
As we look ahead, the Australian economy faces ongoing adjustments. What do the next few quarters hold for small businesses, and how can they best navigate these turbulent waters?
Current macroeconomic forecasts suggest that while inflation may have peaked, it will likely remain elevated for some time before returning to the RBA's target band. This implies a sustained period of cost of living pressure for consumers and ongoing operational cost challenges for businesses. We anticipate a period of modest economic growth, potentially avoiding a significant downturn at the aggregate level, but certain sectors may experience a market correction as consumer spending patterns shift. The labor market is expected to cool slightly, but wage growth pressure will persist, albeit at a more moderate pace. Businesses must factor in these realities when planning their financial strategies for the next 12 to 18 months.
For small business owners and freelancers, foresight and proactive cash flow management are paramount. Consider Liam, a freelance web developer. He used to accept payment terms of 30 days. Now, he's actively negotiating for 14-day terms where possible, or requesting partial upfront payments for larger projects. By reducing his average invoice payment time from 30 to 15 days, for a client paying $3,000, he's getting that cash into his business 15 days sooner, improving his liquidity and reducing reliance on short-term credit. Another hack is supplier negotiation. Even a 5% discount on his annual software subscriptions, which total $1,500, saves him $75. For his energy costs, he's just switched to a business energy plan that offers off-peak rates, moving his heavy computing tasks to evenings, saving him roughly $50 a month or $600 annually. These aren't build wealth progressively schemes. They're meticulous, strategic adjustments that, when combined, can make a substantial difference to the bottom line, helping businesses weather a challenging environment without experiencing a sharp decline.
The RBA's forward guidance indicates a data-dependent approach, closely monitoring inflation and employment figures. The global economic outlook remains complex, with ongoing geopolitical factors influencing commodity markets and international trade. For Australia, the hope is for a soft landing, a scenario where inflation can be brought under control without triggering a severe economic downturn. However, this path is narrow, and global events can quickly introduce systemic imbalance. Diversification of income streams and prudent risk management will remain key themes for all asset classes and businesses. The ability to adapt to changing market conditions rather than simply reacting will define success.
The landscape for Australian small business is undeniably challenging, marked by escalating costs and an ever-present need for adaptability. Yet through diligent cash flow management, strategic adjustments, and a keen eye on both micro and macroeconomic indicators, our entrepreneurs continue to demonstrate remarkable resilience. Their stories are not just about numbers, they are about determination, innovation, and the enduring spirit that drives the Australian economy forward. We'll continue to track these vital trends and bring you the insights you need to navigate the cost frontier. Thank you for joining us.